On Business Incorporated today. Kenya government reduces the cost of fuel and cooking gas. Zimbabwe Diamond and Allied Mineral Workers Union challenges government on 24% salary increase. Glencoe Plc opens talks to restructure $1 billion loan for Chad. Hello and welcome to the program. It's a fresh week. I'm Ini John Mekwa. Well, let's start with the market numbers. We got this week's edition with numbers from major equity markets in Africa where stocks traded largely positive at intraday, except in Nigeria. Nigeria's main index fell by 0.54%, while South Africa's JSA index rose 0.09% at intraday. Meanwhile, Egypt's EGX 30 appreciated by 1.14%. While the Nairobi Stock Exchange closed Friday's session positive, it was up almost 1%. And in the Middle East, major indexes traded with mixed sentiments at intraday. The Abu Dhabi index rose by 0.59%, while Dubai's main index gained 0.43%. Elsewhere in the region, Saudi Arabia and the Qatar indexes recorded losses at intraday. They were down 0.08% and 0.07% each. So let's go to the UK now, and we are looking at the Bank of England's fresh signal to raise interest rate for the first time since the onset of the COVID-19 pandemic. UK manufacturers also claims on foreign labor and the market is being refuted. Well, let's bring in Juliana now to give us the details. Hello, Juliana, and good afternoon.
Good afternoon, Nene.
Yeah, so Governor Andrew Bailey is suggesting that UK interest rate may rise soon. He believes that the Bank of England will have to act over rising inflation. Any ideas what action we're looking forward to here?
Well, gosh, the only action there is, which would be to raise interest rates from the historic low of 0.1%, which it's been at for about 18 months now, to about 0.25%. And this speculation has all come from a discussion that was held yesterday with the Bank of England governor and a group of central bankers from the G30 group of nations. Of course, inflation was a big topic of discussion, currently stands at about 3.2%. in the UK. And now most central bank governors, particularly Jerome Powell in America and of course here, they all agree that the inflation at the moment is likely to be transitory. But, of course, now we're dealing with a surge in wholesale gas prices. This is predominantly affecting the European mainland, but, of course, it's significantly affecting the UK, and it has a knock-on effect. First of all, the government were talking about consumers. Now big industry bosses are saying it's just costing them too much, and if they don't get help from the government, it is going to start trickling down to consumers, and that is the fear that has raised concerns within the central bank here in the UK. That was what was mentioned by the Bank of England governor yesterday. That's been picked up significantly by markets who had already really priced in a rise in interest rates. But I believe at the time, a lot of people were thinking it would be summer 2022. Now it's anticipated that it will come before the end of the year. Now, the next Monetary Policy Committee gathering, I believe, is on the 4th of November. It probably won't take place at that time, likely to be during December's meeting. But then we have to wait and see. On Wednesday, we're going to be looking at September's inflation details. And I think that is really going to, paint a picture of whether or not interest rates will rise sooner or later in this country. But it's definitely coming.
All right, Juliana, and UK manufacturers are hitting back at claims that firms are too reliant on foreign labor. Does this have anything to do with the compromise to get the 5,000 HGV drivers into the country?
Well, yes and no. I think Made UK, which are an organisation, a trade organisation that represent the majority of manufacturers in the UK, they're in a little bit of a spat with the government. They're not liking some of the government lines that have come out over the past couple of weeks, particularly, as you were saying, down to the shortage of HGV drivers and supply chain bottlenecks. Now, lots of people were insisting that the government, get these visas increased from, I believe, 5,000 to about 100,000, which is the shortage of HGV drivers. And a lot of government ministers that have been speaking on British TV have been saying, no, we're not going to be using foreign workers to do jobs that British people can do, and that the industry really need to be looking at domestic work. And now that's really offended Made UK and some of the organisations that they represent. And it's a long time coming. So they've written an open letter ahead of the Chancellor Rishi Sunak's budget. All eyes and ears are waiting for that budget, which I believe is due sometime next week. And they're saying, look, not only do we want you to stop that rhetoric, because the industry does support domestic staff, don't avoid the main issues, which are all of the problems that Brexit have brought, which does include some of the supply chain bottlenecks that we're seeing, lots of bureaucracy at the borders. And they're basically just asking the government to work with them and not against them, and to stop this kind of hostility of words, if you like. They're also asking for the Chancellor to make sure that tax is significantly reduced, because that has been a huge burden, especially for businesses during the pandemic. And,
well, we talked about the possibility of an interest rate rise some time ago. UK bond yields soared on that platform. So how is the market now? How's the market reacting to this?
Yeah, after last week's great run, FTSE started off in the red this morning. It's still there at intraday. The all share is down 0.23%. The FTSE 100 also down by 0.26%. And the FTSE 250, the domestic market, that's down by 0.10%. In the currencies market, the British pound is down today on the US dollar by 0.16%. Also down on the euro by 1.10%, and down on the Japanese yen by 0.15% at intraday, Annie.
Well, thank you so much, Juliana. Enjoy the rest of your day.
Thank you.
So let's go to the Asian market now. Stocks in Asia Pacific mostly slipped today as investors reacted to the release of key Chinese economic data. In mainland China, the Shanghai Composite slipped 0.12% to close, while the Shenzhen Component declined 0.45%. The Hang Seng Index in Hong Kong fell 0.4% as of its final hour of trading. Official data on Monday shows that China's gross domestic product grew 4.9% in third quarter. That was below expectations. Elsewhere, the Nikkei 225 in Japan shed 0.15%, while the Topix index declined 0.23% to end the trading day at 2,019.23. South Korea's Kospi closed 0.28% lower. Meanwhile, shares in Australia outperformed, while the S&P AX 200 advanced 0.26% to close. Well, let's see what's happening in Europe now. We have Conrad Bussen joining us now to tell us what's going on there. Hey, Conrad, good afternoon.
Good afternoon. Thanks for having me back on Channels TV.
Good to have you back, Conrad. So what's making the markets more nervous today? China's disappointing growth rate or the rise of the oil price?
Well, both, of course, but what's really making people here in Germany and also on the markets more agitated is the rise of the oil price. You know, the European the European brand Brent has reached $85 a barrel for the first time in 7 years. But what's even more, touching people is what's going on at the petrol stations. The price of diesel here in Germany has reached a record high. So, of course, everyone's talking about it. And this is reminding people that also natural gas is expensive, also electricity is expensive. And this, of course, will have some sort of impact on the willingness of consumers in the country to spend. This is what people are concerned about, how much will this eventually impact the willingness of companies to spend as well. So of course China is an important factor, but the high energy prices are really what is making people on the markets quite nervous.
And the issue with the chip shortage is still on, and now Philips has been hit by it. How much of a surprise was it, profits warning for the markets?
Well, it hasn't been a big surprise since the chip shortage affects so many different companies. What has been a bit of a surprise is how long it took Philips to come out with this profit warning because, well, as I said, the chip shortage problem has been out for quite a while, as well as the problems that Philips has with faulty respiratory devices which have come out in the spring. Since then, the share price of Philips has lost around about 25% of its value. So, of course, Philips could have made an effort to explain a bit earlier what's going on and what the impact of all these negative factors is on the business of Philips. Of course, as difficult, obviously, as it has been to see this chip shortage coming, it's also very difficult to predict when it will be over. Philips itself says that the pressure is expected to continue until the end of this year. Many people in Europe's business world believe that it will last well into the next year, 2022.
And Facebook has announced to launch a metaverse, and European developers are supposed to build it. What's behind this plan, and what's the reaction of the market so far?
Well, Facebook is a for-profit company, so people on the markets are focusing on the potential profit that Facebook will make with this metaverse. Obviously, the company, due to all the criticism that it has been facing recently, you know, for lack of transparency, for potentially putting some of its, teenage users at risk, is now choosing a bit of a softer approach. It wants cooperation with other companies. It doesn't want this metaverse to be dominated by one single company. On an open source basis, people in this metaverse are supposed to meet, to spend time there, to mix the virtual world and the real world, and of course, to spend money. This is the target that Facebook has. Of course, what's a bit surprising is to hear that Facebook is doing this in Europe because, the continent doesn't really have a reputation of being the most innovative and technologically advanced place in the world. But obviously, all the criticism that Facebook had to face in the US Senate makes them hope that they might find a bit of a, friendly approach by authorities here in Germany. Whether or not that will happen remains to be seen. Virtual reality, mixing the real world and the internet world, that is something that makes many people here in Europe a bit scared. So authorities will take a very close look at those plans by Facebook.
Yeah, but at least there's the gain of about 10,000 jobs potentially, if they come there. So I think it's a win for you guys. Well, thank you so much, Conrad, and enjoy the rest of your day.
Thank you.
So let's move on to the U.S. now, where stock index features slid in early trading today after the major averages posted their best week in months amid a stronger than expected start to earnings season. Futures contracts tied to the Dow Jones Industrial Average shed 0.32%, S&P 500 futures lost 0.34%, and Nasdaq 100 futures lost about 0.4%. Strong results from the first week of earnings, including from the largest banks, have pushed the major averages to within striking distance of their all-time highs. The Dow is less than 1% from its record high, while the S&P 500 and Nasdaq Composite are 1.6% and 3.3% below their records, respectively. As earnings seasons get into full swing, investors will be watching for company commentary around supply chain bottlenecks and inflation, among other things. We'll take a short break now. When we come back, we'll head to the African continent to stay with us. Hey, welcome back. Let's head to Kenya now, where the people are having a bit of reprieve. The Kenyan government has reduced the cost of fuel and cooking gas. A lot of people wish that would happen in Nigeria, isn't it? Well, the government has been under sharp criticism since mid-September, when the commodities retail price went up by an average of 9 shillings. In the latest review, the EPRA adjusted the fuel prices until mid-next month by an average of 5 shillings for petrol and diesel, with kerosene going down by 7.28 shilling per litre. Well, we have Mercy Melanoy joining us from Nairobi now to tell us what the atmosphere is and the reaction. Hello, Mercy.
Well, hello. Nice to see you again.
Good to see you.
It's
I'm just curious, if it was in Nigeria, because we also have the hike in gas, cooking gas prices especially, and of course there's a fuel and all that, there'll be jubilation on the streets of Lagos at least. Is there jubilation on the streets of Nairobi now?
Well, not really. I think our jubilations and our tribulations always happen on Twitter, sadly, not on the streets. But it's quite a reprieve, especially for consumers who have been really complaining and raising their voices as far as the high cost of fuel is concerned. And also, largely also the people who've made this happen, of course, it's the members of parliament and also the different committees that sit at the Kenyan parliament, who actually called on from the Minister of Petroleum to the regulator, EPRA, also EPRA. And also they've been quite questioning these two entities who are in charge of fuel in the country on why the sudden increase. We were on a subsidy. What happened to the subsidy? So these are some of the questions that they had to answer to the Kenyan Parliament and the different committees, from the Finance and Planning Committee, the Petroleum Committee, and the different committees that actually are in charge in Parliament. And of course, these two entities from the Ministry of Petroleum and also the regulator had to sit down with these committees to answer the questions and to see what is causing the increase in fuel. Well, apart from tax also, of course, some of the things that came out in those meetings included that Kenyans, especially the taxpayer, paid a lot of demurrage fees at the port. And of course, for demurrage fees, of course, it comes about whether there are delays at the port or goods have overstayed at the port. And of course, it accumulated to about 1.3 billion shillings, which was quite a lot. But from the conversations and the questions and the sittings that happened in Parliament and also among the different committees in Parliament, eventually the regulator had to reduce the fuel charges by 5 shillings and also the cooking gas by 500 shillings, which is quite a reprieve for many consumers. But something interesting also that is coming out in Kenya is that a lot of people are trying to find ways to survive the high cost of fuel. As much as it is down, it's still up from where we were a few years ago. So right now we are finding that recently, actually, we find cars installing cooking gas, the LPG gas in their cars. So instead of using fuel, you're using gas for your car. And this is something that we've observed a lot with the digital taxis, those who drive Ubers, among other digital taxis here in Kenya. Especially if you're on the road, they've been making the shift towards the LPG gas, using cooking gas for fuel. But something interesting is that it wasn't regulated and also it wasn't insured. But also last week, we saw a step further by the Association of Kenya Insurance stating that now they'll be able to insure cars that are fitted with cooking gas. So it's quite a step forward. At least now there are alternatives. And also something I've seen is that there has been an increase in companies who manufacture electronic cars. So we're seeing more cars coming in that function with electricity. So some of the gains are seeing that Kenyans are still trying to find ways to get through the high fuel cost. It's below from what was there, but it's still high from where we were. So these are some of the steps that Kenyans are taking to just maneuver through the high cost of fuel. Well,
we hope that, with the more demand on gas and electricity, it will not also pull prices up there. But we'd just like to know, this reduction that we see in fuel and cooking, does it come in form of a subsidy, and how sustainable is it?
Well, there was quite a bit of pressure to the government, especially with the high cost of fuel, also considering that you're in a highly political season. So there are two angles to it also. Of course, with the campaigns happening, everybody's talking about the high cost of gas, everybody's talking about the high cost of fuel, but also apart from that, there's the Petroleum Development Levy. So part of this is what it's supposed to cater for in terms of subsidies, of course, to the Kenyan consumers, which is what was actually happening from last year around March, when the first case was announced in Kenya, and there was a lot of lockdown and the cost of living went high, people lost jobs. So from the Petroleum Development Levy and also from the subsidies, that's where the subsidies came from last year, and that cushioned us until now, last month when they increased the price. But also apart from that, there's a lot of regulation that is happening in the petroleum industry, and part of what the Kenyan Parliament was looking at is if they were able, will they be able to tell us, for the regulator and the ministry to tell us that this is what is causing the increase in fuel. So the lucky thing that is happening here is that there is a bit of regulation, which is a bit strict, but also we have the Petroleum Development Levy, which of course, actually, if you look at our power bills, especially our power bills, that it's also part of it. So we are paying a lot for it. It's reflecting on our power bills, it's reflecting on our fuel, So these are some of the questions that the Kenyan Parliament was asking the regulator and the ministry. The consumers are already paying a lot in terms of the fuel levy. Why are we still having high cost of fuel? But of course, now with the Petroleum Development Levy, now at least we have some sort of subsidy. But what we are looking out for is to see on the 14th of next month if the prices will still remain the same or they will increase. But also it's a catch-22 situation also for producers, also considering the high cost of fuel, crude oil, especially in the global markets. So it's something we'll be observing to see. But for now, at least we have a few more weeks until the 14th of November to enjoy the lower cost of fuel. Then from then on now, we will see what will happen and what the regulator will do as far as the cost of fuel is concerned.
Well, we hope you won't have a lot of panic buying since, there's a limit to it. The 14th of November, people might just want to stock their homes. And this, of course, brings up another risk. But anyway, thank you so much, Messi Melanoy, for sharing your thoughts with us from Kenya, Nairobi, Kenya.
You're welcome.
Moving on, the Zimbabwe Diamond and Allied Mineral Workers Union has taken the National Employment Council for Mining Industry, Associated Mine Workers Union of Zimbabwe, and the Chamber of Mines Zimbabwe to court, challenging the recent 24% wage increase, which is described as peanuts. The National Employment Council announced a 24% increment in a circular dated September the 28th, which it said had been agreed upon for the industry with effect from the 1st of July. The increment saw the minimum salary of mine workers increasing from $30,500 to $70,740. In the application for review of mine workers' wages, they argue that negotiations should be done quarterly. I'll move over to Chad now. Glencoe Plc, an Anglo-Swiss multinational commodity trading and mining company with headquarters in Switzerland, with its oil and gas head office in Lagos, has hired advisors and opened talks with Chad to restructure an oil-for-cash loan worth more than $1 billion for a third time. Chad had in January officially requested a debt restructuring, the first country to do so under a common framework agreed last year by China, another group of 20 members, with the help of Paris Club of major creditor countries. Chad state creditors and the IMF agreed on the restructuring, but insist that Chad must reach comparable terms with other bilateral and private creditors. The IMF considers Chad's total debt of around $3 billion unsustainable and condition further financial support on its restructuring. Just before we go, let's see what's happening in the oil space. Oil prices hit their highest level in years early today as demand recovers from the COVID-19 pandemic, boosted by more custom from power generators turning away from expensive gas and coal to fuel, oil, and diesel. Brent crude oil futures rose 80 cents to $85.65 a barrel after hitting a session high of $86.04, the highest price since October 2018. U.S. West Texas Intermediate crude futures climbed $1.24 to $83.51 a barrel after hitting a session high of $83.73 a barrel, highest since October 2014. Both contracts rose by at least 3% last week. Daily crude processing rate fell to the lowest since May 2020 in September in the world's second largest oil consumer, as feedstock shortage and environmental inspection crippled operations at refineries, while independent refiners face tightening import quotas for crude oil. That's it on the program today. Thank you so much for being a part of it. Let's do it again tomorrow. God's grace. I'm Ini John Mekwa.